Welcome back. You're watching Dukascopy TV. Well, the US has recently criticised Germany for running its current account surpluses. I have Frank Hollenbeck in the studio. Welcome, Frank. So, if we look at what Paul Krugman recently said, the problem is that Germany has continued to maintain highly competitive labour costs and run huge surpluses since the bubble burst, and that in a depressed world economy, this makes Germany a significant part of the problem. What's your take?
You get the impression that U.S. government economists and Paul Krugman are still living in the 1950s. First, Germany no longer has its own currency, and a German export is not really German. Okay, to talk about Germany's current account surplus, okay, is a bit like talking about Georgia's current account surplus with North Carolina, or Wilmington, North Carolina's surplus with Raleigh, North Carolina, or even my current account surpluses or deficits. For example, I run a current account surplus with my employer, okay? And I run a current account deficit with my supermarket. However, you're not going to ask me to run to my supermarket manager and ask him to buy more of my economic services. So for me to talk about a current account surplus being excessive for Germany is somewhat silly. Okay, and also we also have to realize that a German car sold in Spain is not very much German. For example, today, okay, BMW basically imports a lot of its parts from everywhere in the world. Okay, it is true that some of the labor, and not all of it, because some of the labor may actually come from Spain, some of the labor to make a car will be German. But with technological innovations, there's very little labor that goes into the making of a car. A lot of it is capital. Okay, so that the profits that BMW makes may be issued to a Spanish shareholder who will take those euros and maybe spend it on Spanish goods. So for me to talk about a current account surplus is somewhat silly. Also, what the government economist is saying, and Paul Krugman is saying, is that Germany is producing and not consuming, and it needs to boost its consumption. They basically have it all wrong. Okay, we know that it is supply that creates demand, and that the most productive countries are also the most the countries that consume the most. In other words, it's what we call Say's law, is that what's important is supply, not demand.
And several top economists, including Ken Rogoff and Paul Krugman, have written articles advocating more inflation to get us out of this slump. So would you agree, disagree? What is your take?
Well, I think my favorite quote is from Ludwig von Mises, who talked about the post-Malthus Say debate of the 19th century. And he basically said that though the authors and politicians who made the alleged scarcity of money responsible for all ills and advocated inflation as a panacea were no longer considered economists but monetary cranks. The struggle between the champions of sound money and the inflationists went on for many decades, but it was no longer considered a controversy between various schools of economists. It was viewed as a conflict between economists and anti-economists, between reasonable men and ignorant zealots. When all civilized countries had adopted the gold standard or the gold exchange standard, the cause of inflation seemed to be lost forever. For me, these U.S. government economists or Paul Krugman are monetary cranks or ignorant zealots. We know that once inflation picks up, it's almost impossible to control. In 1915, inflation was 1%. It was 8% in 1916, and then 17% in 1917. It was 2% in 1945, and then it was 14% by 1947. Okay, we know that inflation was relatively mild in 1972, and then it shot up to about 11% in 1974, and stayed at very high rates until Paul Volcker actually raised interest rates to 19% to basically tame the beast. Okay, if we had interest rates at 19% today, we basically would have an economic calamity.
And about 2 months ago, you said equities were the best place to invest. Now, the S&P recently hit a new high. So do you still hold this view?
Yes, until the Fed begins to taper. What's interesting now is that Wall Street is actually asking for tapering. In other words, we have a lot of the top mutual fund managers are basically saying is that they want this to end. And the reason is that they're kind of caught in a Ponzi scheme. Okay? In other words, they have to play the game or else they'll lose customers, but they know that it's going to end. Okay? And they much rather have gains in the stock market based on fundamentals than simply by additional liquidity being put into the system by the central bank.
Thank you very much. And thank you for watching Dukascopy TV. Well, I hope you did enjoy this interview and do come back for many more. See you soon.